All right, good morning, everybody. We have an ECB announcement happening soon. This is going to be a pretty big deal. There's a disagreement, an argument, or a no consensus on what the numbers are going to be. The ECB has not raised rates in a long time, so there's a lot of anxiety going on. Mario Draghi did put in his notice to leave, and it apparently fractured their spreads last night. News is still coming in on that. We're not even feeling it in the US yet, but there's a lot going on out of the European Union this morning that has the capacity to really rock this market today. We do have a full house of economic events, lots of things on the table. This new crisis management tool is what they're working on right now. For us in the US, jobless claims and the 10-year tips, 4-week auctions. Notice there's no speakers here in the US today. Bring us over to the Thinkorswim. Look at the calendar of events today: 8:15, 8:30, 10, 10:30, 11, 11:30, and 1 o'clock all day today. So very likely no 0-day setups. And it's very likely that the market will not stick a direction, right? We're likely to see more of a choppy ranged day. Of course, we could end up with a significant one of those days where everything just sticks in one direction and runs, right? Pegged out. Right now we're looking at a daily chart. You can see how we're still hovering within that expected move for the week. We've managed to get outside of it a few times, but for the most part, we're still inside the box. And the longer we stay in one spot, the closer that 10-period moving average is getting. Now, as we've been talking about in the last few days, when 8 out of 10 stocks are all doing what the S&P is doing, then all of your monsters of tech pretty much have this same setup. Higher lows, equal highs, maybe an expansion beyond their 50-period moving average. So a lot of our top names right now have either just made contact with the 50 or have broken through the 50. And there's really a consensus that the current low that we have is not the last low that we're going to see. The consensus has been that we're going to see 3,400 before we would see 4,400. So you just want to kind of keep that in mind of the what's more likely scenario. And that logic was pretty much based on bad earnings. And so far, we haven't really seen a lot of bad earnings. It was interesting to note, with all of the strong positive flows that have come in the last few days, since this last low that we got this back on 7/14, the flows have been really positive. And yesterday, when Google came out with the same kind of news that Apple had come out with the other day, sure, the market knee-jerk reaction was to the downside, but we bounced off the pivot point, held it, and got back above the VWAP. That's how strong the flows have been. And until we see some negative earnings come out, we're likely to see a lot of this aggressive buying continue, these strong flows. If you look at the top 20 names in the Nasdaq, Apple, Microsoft, Google, Amazon, Tesla, Meta, Nvidia, Costco, AVG, Adobe, they all have this same play, right? It's the same setup, it's the same wedge, it's the same play. And other than a few names that you can hit, like maybe T-Mobile or Pepsi, something like that, a few names away from the top 20, they are all sitting in the same spot, the same location. It's the same play across the board. And by market cap, I mean, I was generous to put Netflix and PayPal in there. By market cap, it's 152 and up. It's the top 20 names in the Nasdaq. These top 20 names drive everything in the Nasdaq, right? And if you look at just the FANG names, Apple, Microsoft, Google, Amazon, Tesla, Meta, and Nvidia, we're primed for some really nice continuation all the way up until the FOMC announcement. That'll be the last announcement until September. So every month that we've been dealing with this FOMC, we've been scrutinizing data points, really focusing on CPI numbers and things like that, and kind of questioning, what is it going to do to the Fed? What is the Fed going to do with its decision process because of these numbers? Everybody trying to second guess what's going on. But after this Fed announcement, we're going to be done until September. So it's going to be more earnings focused and less earnings, or less data focus, right? After the July meeting. So when they come out next week, they're going to give a list of data points that they're going to focus on. They're going to set some benchmarks that they want to hit by September. And then everything that has not yet reported for the quarter is going to be scrutinized really, really heavy. Now, yesterday, I was trying to find the phrase that really kind of summed up what had been going on in the last year. We had destruction in liquidity. That was first one, right? We had peak liquidity that needed to be resolved. After peak liquidity, it was valuations. And now we're getting into peak earnings destruction, right? So repricing of earnings. So we haven't really seen any really bad impact from the earnings so far. Even Tesla's report last night, we had a whole lot of running around, but not much of an outcome yet. And like we talked about with market weight, it has the capacity, right, to drive the order flow in the market. So if Tesla was basically a dud and didn't drive the market in one direction or another, and that was the last significant one. Well, I shouldn't say that. I shouldn't say the last one. That was one of the most significant ones. So demand destruction in peak liquidity, repricing and peak valuations, those are done. That's out the window. And now repricing on peak earnings. Getting some reports that there's an audio problem. Let me see what I can do to fix that. I don't really have a whole lot of choices on what I can do here. See if that fixes things. How about that, guys? That cleared things up a little bit. All right. I don't know. You know, I had a meeting the other day in Microsoft Teams, and after that meeting, my audio settings were just all jacked up. And I don't know. I'm not a big fan of that Microsoft Teams. I've got it, but I don't use it much, mainly because I find it hard to share and bring other people into the circle. The main thing, guys, is bear market rallies. You know, they can last for a couple weeks. We can really come off of these lows. Don't try to short this market. Don't short it yet. I shared a picture yesterday in the chat. That looked at the advanced versus the declining issues in the New York Stock Exchange and in the Nasdaq. And right now, we just crossed back above a daily 50 moving average. So this is the situation right here. This is why we don't want to short anything yet. We got to let this thing curl over. What you're looking at is a daily chart with the advancing minus the declining issues in the NYSE, New York Stock Exchange. And in the bottom of this picture is the SPX. And in the top is the advanced decline. And I added the boxes, I added the colors into this, the green and the red, because since the first of the year, right, since 2022, when the S&P has been moving to the downside, every one of these little rallies to the upside, that was the FOMC from March, right? They came out with their announcement. We had that nice little rally. We got above the 50. Didn't hold it. Had an exaggerated move to the downside in this cumulative indicator, and the S&P significant move to the downside. All right, we got into the May meeting. We had that little rally to the upside, barely made it through the 50. Significant crossover, back down we went. Well, right now we're coming into that next FOMC meeting, and we're getting a lot of flows. We're not really seeing that much of a rally compared to the other ones, right? But I mean, it's there. The flows are there. The move is there. We're back across the 50. It's the third time this year we've been back across the 50. Everybody says we're not done. The consensus is that we're going to see lows still. But even if that's not true, markets can't just run straight up. They're going to pull back. They're going to pause. They're going to consolidate. This thing hasn't even begun to do any kind of basing or range or consolidation, right? It hasn't even begun to do any of that. It's still pointing straight up. So don't try to short this market until that thing at least begins to base a little bit. The flows are just too strong. Everything is just ripping too far, too fast. Even the negative news from Apple only lasted a day, and the next day it came right back out of it. On Google, it didn't even last a half a day, and we came right back out of it. Can't fight those kind of flows. All right, so for today's trading, it'll be the same as yesterday. Base case scenario is that we maintain the range. We're more likely to do that than to do anything else. The range that we're speaking about starts with yesterday's highest value down to yesterday's lowest value, which happens to be the Globex. So we're looking at 39.77 down to 39.22. Since that's a really large zone or range to be dealing with, it's easier to break those down into quadrants, into zones, which would start with something like our own Globex high, or the high of yesterday, down to the open of the Globex session. So from 39.77 down to 39.53. Then from 39.53 down to the cash open of yesterday, which gets us at 39.38. And then from there down to the low of yesterday, which would be 39.21. So it's three different zones that we would have to focus on. To be able to hit those zones in that downside move, we still need to break through our own Globex low, so 39.45. We got some reasonable, decent pivots all the way, right? And they're all those universal pivot points. So if that's our base case scenario, the next likely thing is that we break through the downside. And I say that it's more likely than an upside move, just simply because we've been presenting in this topping pattern for 2 days. We can continue to break out. I mean, we're above the 50. You know, it has the capacity with all of the flows that we were just looking at over at stock charts. It has the capacity for that upside move. But to me, the argument is base case is our most likely bet. We'll stay range bound today. And second argument would be that we pull back a little bit simply because of how far we've moved. Now, like we were looking at on the daily chart here with how far from the 10 we are, we're not too far away from the 10, but it was a significant move. I also think that this news out of the EU this morning is going to really rock the market. That move in energy last night was significant. Oil dropped like 5%. We had that V bottom rally back up in the dollar, and the bonds are threatening to break to new lows. Bitcoin continues to get those really sharp liquidation drops. And I think this thing is just prepping up for a lot of chaos this morning. So my argument is if we don't hold the range, we're more likely to break the downside than the upside. So if we have an inside day breakout to the downside, 39.11, the cog line, will be one of our targets. That puts us in line with half of an ADR. Then we had the cash open from Tuesday and a full ADR at 38.71. $38.94 be one of those pivots that we would focus on to the downside as well. It's half of the measured move. And 39.30. Which is half of the measured move of the Globex we have this morning. So we got some reasonably decent targets to the downside. Should we have an upside breakout, just to get into that position, we got to get back above that VWAP. We got to get through our own Globex high. Then we get the inside day breakout. Then we would begin targeting the ADR. Half the ADR is 39.95 and the full ADR is 40.36. Use that same measured move. $40.06. And if we take the entire measured move of yesterday, oh, we already got lines there. Perfect. It lines right up with our cog lines. So it'd be 39.95, 40.05, 40.11, 40.31, 40.36. All right, we're looking at a 10-day, 30-minute volume profile. We're outside the box, and we're building up more and more volume up in that level, but it's just trash. When we're outside the box, our expectation is that we will go back to the box. And when we're at the top of the box, our expectation is that we'll go to the bottom of it. Same thing as when we're at the low, we expect to go to the high of it. So our first target would be back inside the box. it doesn't owe us a drop back into the box. We just got to keep in mind that that's the more likely scenario. So when we see it moving farther away from the box, it's noteworthy that it would take a considerable amount of flow to continue to drive us farther away from the box. We also want to keep in mind that the way that this profile works, right? Every new candle that we get in the front on the right side is going to subtract a candle off of the left side. And I know that may seem like Captain Obvious stuff, but if this volume from down in this cluster area around the point of control, if we start to lose these candles today, we're going to lose a lot of that point of control. This entire profile is going to shift throughout the day, right? It's going to start to creep higher and higher and higher. So price doesn't necessarily have to come back into the box. The box is going to come up to price eventually. We don't have an untouched point of control to the upside because we hit it last night. And we don't have one to the downside from Tuesday because we hit it yesterday. Yeah, the EU news is the idea that the ECB is looking to announce rate hikes this morning. If you go to Finance Juice, here is the list of things that are coming out this morning. There's a ECB press conference at 8:45 because this is not market time, it's my time. And if you read the European market wrap, it'll lay out exactly what the news is based on and why you want to pay attention to it. So if we keep this bullish flow that we were talking about, you really don't want to try to short this thing. Maybe the broken wing butterfly or some ratio spreads would be a good way to run this. What I've been talking to people about is consider which ones you're going to short once we start to see that rollover come in, right? It could be Monday before we see it. It could be after the FOMC that before we see it. And on a lot of these names from the monsters of tech, they've already made an exaggerated move to the upside. We're already pretty stretched out. And when we're that far advanced, when we've had such a significant move in the last few days, it makes it hard to want to try to go long at this point, right? It's like if you weren't in it by now, you've pretty much missed your shot to try to take a long without an increased level of risk. So you could still do it. You're just going to have to stomach the idea that, you know, you're getting in after it's already moved a long ways. If instead you go ahead and just shrug it off and say, okay, well, maybe I got out of the upside run too soon, or I missed it and I didn't get any of the upside run, we're still going to get that rollover. Kind of be putting your focus on to the idea of, well, which one of these am I going to take when we do roll over? And they're all going to be moving based on what's going on in the S&P and the Nasdaq, right? So you're basically trading SPY when you're trading any of those MOT names. They just have a bigger beta, right? So SPY might move 2%, Tesla might move 6%, right? But it would still be, if SPY is positive, Tesla's positive. If SPY is negative, Tesla's negative. that kind of concept for all of those monsters of tech names, right? Or even just for the top 20 names in the Nasdaq itself. So maybe the ones that have ran the most would be a target worth focusing on, right? Which ones are the most extended in this last leg up? Now we talk about don't diddle in the middle. Google, for an example, still basically in the middle of these two zones. That could be a reasonably decent iron condor play. If you wanted to leg into it, perhaps let it come up to that 120 and then put on your top side. Then let it fade back down towards that 106, 107 and put on the bottom side, right? If you leg into it and you get your spreads equally spaced, you can actually get a zero loss, zero risk iron condor. I haven't had very many of those. Usually I get legged in on one, and when I go to leg into the other one, things just aren't in a spot where I can get it, right? So it sounds great, but actually pulling one of those off is not as easy as it sounds. And Meta too, underneath that 200, we're not quite in the middle, but 175 on the downside, 200 to the upside. And you know, kind of that same argument, don't diddle in the middle. Lots of expansion here. Again, don't step in front of these things and try to short them yet. Just be really thinking about which one you want to short when the opportunity comes. All right, looking at the sectors this morning, mostly in the red, a few of them in the green. Emerging markets is what we use for our global risk on, risk off sentiment. It's not yet at 0.5%, which is kind of our benchmark for something being up or down in the morning. So we want to keep our eye on that and see if it continues to expand to at least a 0.5%. The marijuana sector up more than 0.75%, and cloud. Now with cloud, this thing is not really liquid. So the fact that it says 0.8, it's very likely an after hours print, not a morning print. Now, I'm looking at it here and it says that it's a morning print, but there's not a lot of volume behind it, right? It was just one print. So I don't give a lot of credence to this, considering we're not seeing the same, we're not seeing a lot of tech up this morning. The Qs aren't up, 0.8, and XLK is not up. So considering all of that, I would just ignore the fact that cloud is up at all this morning. For the things that are down, kind of leading the way is Bitcoin. And it shows we're getting a little bit of flow now, but it took a significant beat down after hours yesterday. And when you're looking at it on the daily chart, we got that nice cup, and we are underneath that big old gap right there still. That $5 move in oil last night hit USO. Natural gas is down, and XLP, or exploration side, also down. At the very least, we could be looking for a little bit of mean reversion or linear regression this morning, right? After a 5% drop in one direction, catching a at least 2.5% run back up would be nice. The devil's metal, silver, also down this morning, gold down this morning. So what these legacy old school S&P 11 sectors don't really cover in detail, we want to kind of break out a little bit on our own, like the chip names. When it comes to these chip names, a lot of them are in the crypto list. AMD, NVIDIA, Taiwan Semiconductors, PayPal, Square, all of those are either heavily vested in blockchain or they own a lot of coin, and they're in the crypto's futures index. It's where we get these names from in this list. So if we start to see that turnaround in Bitcoin, we could start to also see that turnaround in these chip names. Something to perhaps kind of keep our eye on. This is Bitcoin, right? And from the close last night, you know, we got pretty close to 2,400, and now we're sitting below or around 22.6. So if we can start to get that rebound in here, see it reflected in the chip names, might give us a pretty decent play too. And the EV market. Ford's up 2.25. GM is not. Li Auto, Ecb, Neo, all down. But on the upside, Tesla and Ride and Ribbon. Right, so it's kind of a mixed bag this morning when it comes to the EV names. Much of the last week and a half that we've seen moving around has been in finance, right? If it wasn't for finance, the S&P would have had a much worse time of it. And the other day I made a video showing how tech and finance kept passing the baton back and forth in the flows. They just kept carrying our market farther and farther and farther and farther. It was a phenomenal day, right? It was the day the S&P moved 3% the other day. So, you know, if you're looking for a day trade or a play on the day, it's going to continue to be finance and energy. Energy today, because of that 5% drop, we'll see if we get anything out of it on the upside, regression back to the mean, and then finance, right? Because finance has been the play in the last few days. Plus, those are cheaper, highly liquid day trading markets, right? They've got good options, nice liquidity. They're not overly expensive products to trade. They've been a benchmark all year so far. Hasn't been the wrong way to go. I continue to focus on that. It is my day to stream. I'll be in the futures room. Made some videos per request yesterday. Like I said yesterday in the stream, if you are looking for content or material at the Bullish Bears and you don't see it, give us a heads up, right? Send out a message, use the contact us button. And somebody did that yesterday and said they wanted some tick videos. What ticks to use if you were trying to adjust your charts to a different perspective, time-based charts, tick-based charts. So I did 2 videos yesterday. There's probably going to be a few more to go. Lucian's already getting those put up onto the website. They'll be in the next level library. And yeah, we'll just continue with it today, 9:15. See y'all there.